You point out that there are some positive trends. People are flush in terms of, you mentioned consumer wallets are primed to return to gaming. Is it going to be a bad ending, given some of the sights we saw in Vegas with so many people so close to one another without masks, Kevin?
Thanks, Joe. We hope not, certainly. Right now, what we're seeing from a consumer spending perspective is that wallets are primed for a variety of reasons to spend. And when you look at the experiential channels, there are very few outlets, and gaming in many circumstances, whether it's Las Vegas or regional gaming, is the only game in town. So it's there are crowds gravitating towards these venues. And near term, we're seeing the evidence of that in the spend per visit. Those numbers are up significantly. Volumes are down, obviously, with regulations in terms of occupancy levels and a lot of plexiglass. But there is, certainly right now it is a very they're seen as being a beneficiary, I think, in the current environment.
All right. So there's a lot of people.
I think beyond as we.
Sorry, I'll let you finish that thought, but there's a lot of people. It's going to be crowded, but there are going to be things that don't get you back to 100%, right? What, with the seats missing at blackjack and with some of the other things that are not going to be like before, how far down a revenue do you think? Can it get back to where it was, or are we going to you just need to build in 10 to 20% less?
Well, okay, so you need to keep in mind Las Vegas. I mean, there are two different venues here. We're talking about regional gaming, which is a lot more dependent on actually gaming itself. Then you look at Las Vegas, and Las Vegas itself is much more diversified. You've got convention business, food and beverage, and other sorts of entertainment there. So those markets tend to be, or Las Vegas tends to be, more of a destination business-centric that is going to lag naturally with a business cycle. So to the extent that convention business is a long booking cycle, you're going to see a lag, and we expect that to be a several-year lag. When we're looking at gaming, the lens kind of, as we're looking at the consumer right now, we look at it as being the present environment for spending, and it's, the wallets are primed for spending. As we looked into the next, call it several months, then you start to see other competition coming online from other experiential-based, venues, which will compete away the dollar. And then structurally, even beyond 2020, I think we do have some questions that you have to consider about the extent to which COVID-centric consumer platforms may have accelerated the adoption for mediums such as, home fitness, media consumption, and these sort of things that for people that would have otherwise been sitting in a casino that day, this might be a new source for taking wallet share.
But anybody who's got an online presence in DraftKings, I mean, you look at or the other online sites, that's going to, for the stocks themselves, if you're involved, that could help offset some of the other stuff, the structural problems that you just mentioned.
Without a doubt. I mean, the sports betting angle is a shot in the arm for all the operators that have, quote, skins in the game. Right now, we've been constructive on the sports betting industry, or been involved for the last year or so. There are a few different avenues of getting involved in those stocks. You have DraftKings, you have Penn through Barstool, and then you've got the Caesars and El Dorado with William Hill. So there are different channels to which you can participate. I would say that if the environment is ripe for state deficits leaning on legalization across the board, but this process always takes slower than you'd like. And even though where we are right now is probably factoring in something already approaching a $18 billion market for that.